Welcome to the Deep Dive. Today, we're plunging into something pretty huge, a concept that's quietly reshaping things. This hypothetical global shift, from traditional money, fiat currencies, over to cryptocurrencies. We've really dug into your sources, the articles, the research, expert takes, trying to pull out the key insights for you. Our mission really is to give you a fast track, a shortcut to understanding what this economic shift could actually mean.
Yeah, and what's truly fascinating here, I think, isn't just new types of money. It's potentially a fundamental re-architecture of entire global economies. We'll quickly define what fiat and crypto basically are, then jump into the impacts, how it hits central banks, your everyday transactions, even global power structures.
Right. So for those of you already kind of following this space, the real deep dive starts when we look at that core difference. Fiat dollars, euros, it's centralized, right? Governments issue it, supply can change. Cryptocurrencies, though, they're digital, decentralized, often with a fixed supply set by code. The big question isn't just what they are, but what happens if one starts replacing the other on a massive scale?
Exactly. And that fixed supply you mentioned, that often pre-programmed limit, think Bitcoin's 21 million coins, the halving events that fundamentally challenges central banks, their usual tools like injecting cash or tweaking interest rates to manage the economy, those could largely vanish. This sort of erosion of central control, it might leave economies way more vulnerable to instability, to those big swings in the business cycle.
And here's a really interesting twist. A world running mainly on fixed supply crypto. It could actually create a strong deflationary pressure. Money buying more over time sounds good initially, right? But it might actually discourage spending, discourage investment, maybe even lead to economic stagnation. Surprising flip side.
Yeah, it's counterintuitive. And it raises a big question. How do central banks even respond? Well, many are looking into CBDCs, central bank digital currencies. These are basically digital versions of fiat money issued by the central bank. The idea is efficiency, financial inclusion may be faster, cheaper payments, reaching potentially the 1.7 billion people without bank accounts.
But there's a huge paradox here, isn't there? While private crypto often emphasizes, individual control and privacy, CBDCs could give governments, unprecedented oversight, like total visibility into every transaction, maybe even programmable money. Imagine your digital cash having built-in rules about where or when you can spend it. It feels like a centralizing move in this whole decentralizing trend.
Absolutely. And if we connect this back to your daily life, a big crypto shift would completely re-engineer the financial plumbing. We'd likely see massive disintermediation through what's called DeFi, decentralized finance. Think platforms like Uniswap letting people trade directly, peer-to-peer, cutting out traditional banks. That means lower fees, faster settlements, days down to minutes, potentially.
So trust shifts then, away from institutions and onto the code itself.
Pretty much, yeah. But while DeFi offers transparency, it also brings new risks, like vulnerabilities in the smart contracts, those automated digital agreements, or just the lack of old safeguards like deposit insurance. We'd also probably see lending, raising capital, all migrating to these platforms, even tokenizing real-world assets for easier trading. And what's really crucial here is the challenge, maybe an existential one, for traditional commercial banks. They'd have to adapt incredibly fast, integrating blockchain, boosting their digital game, maybe even issuing their own tokenized deposits. It's less about just competing and more about fundamental integration, survival, really.
Okay, let's zoom out a bit. Global power dynamics. Crypto could bring financial access to those, 1.7 billion unbanked people? That could seriously boost GDP in emerging markets? And it's a huge, the digital divide. If this transition happens without massive investment in basic digital infrastructure, in literacy, think about 600 million in Africa without reliable electricity or 4G. It could just make existing inequalities much, much worse.
That's a major concern, and this transition would totally reconfigure how money moves globally. Crypto payments can bypass the slow, expensive traditional systems for cross-border transfers. We're talking days down to minutes again, potentially slashing fees. This could be great for small businesses wanting to access global markets, sure, but it also directly challenges the US dollar's long-held dominance and, the effectiveness of traditional financial sanctions.
And the borderless thing? That also hits government's ability to collect taxes, right? Fiscal sovereignty. Tracking income? Capital gains, it gets way more complex with crypto. That could mean less revenue for public services. Interestingly, some countries are even thinking about holding Bitcoin in their strategic reserves. That's a move that could really shift global financial power.
Of course, look, there are still significant hurdles, let's be clear. Market volatility, crypto prices swing wildly, making it tricky for everyday use. Then there's the regulation mess, and it's a patchwork globally. Very unclear. Cyber attacks are a constant threat. Billions have been lost. And just the tech itself needs to scale up massively. Current networks can't handle anywhere near the volume of, say, Visa. Oh, and the energy used in Bitcoin's proof-of-work mining uses huge amounts of power, though newer things like proof of stake are trying to be more efficient.
Okay, so wrapping this up, what does all this mean for you? We've sketched out a world with potential for amazing efficiency, better financial inclusion, but also one facing really daunting challenges. Macroeconomic instability, maybe less privacy, that persistent digital divide.
Yeah, ultimately, whether a transition like this could even work hinges on some big things. Bridging massive trust gaps, getting solid, coordinated global rules in place, and huge investments in the basic digital plumbing, plus widespread financial education. It's a tall order.
So here's a final thought, something for you to chew on. If money, at its heart, is a kind of social agreement, a contract, how do we collectively rewrite that contract for a truly digital age? Do we lean towards, individual freedom and privacy through decentralization? Or do we prioritize centralized control for the sake of stability? And what are the really deep trade-offs for your own financial freedom in this incredibly interconnected global economy?